the next wave will come when the next downturn occurs and the big print and maybe all the stimmies come with it. I think the price of gold isn't going to be in the same zip code. I mean, we're going to be at $4, $5, $6, $7,000 gold, and I think the prices in Bitcoin is not going to be in the same zip code. We're going to be at $200 to $500,000 Bitcoin. So it's there's a lot of upside in these alternative money assets, store of value money assets that can't be printed.
The dynamics of the bond market also play a pivotal role in this narrative. With a massive $36 trillion bond market, Lepard foresees a potential collapse triggered by the Federal Reserve's yield curve control measures. If the Fed locks bond yields at artificially low levels, investors will likely offload these assets, forcing the central bank to absorb them into its balance sheet. This could inflate the Fed's balance sheet to unprecedented levels, possibly from $7 trillion to as high as $25 trillion in the next crisis. As these events unfold, Lepard predicts dramatic price surges in gold and Bitcoin. Gold could climb to $5,000 to $7,000 per ounce, while Bitcoin could soar to $200,000, $500,000 per coin. These assets represent a hedge against the devaluation of fiat currencies and a flight to store of value instruments that cannot be printed at will.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The markets for sound money are forward-looking. I mean, people aren't buying gold, because of what inflation is going to print next month. They're buying gold because they know that in a year or two, the government's going to be forced to print a lot of money. I mean, that's why it broke out from 2070 in March. And I would say, to somewhat to the same degree, the same is true with Bitcoin, although it's got kind of a speculative NASDAQ-y kind of, portion of the demand there. But, but yeah, it's, the next wave will come when the next downturn occurs and the big print and maybe all the stimmies come with it. Now, I would say this, it would have occurred more and faster if the blue team had won in this election, because I think that the red team actually does sincerely want to try to get things back on the right path and balance the budget. I think the math is such it's going to be extremely hard, if not impossible. Look, they've kind of, the Democrats have kind of indicated that they will spend and do whatever they think they have to do to keep the economy growing. We'd be back in another round of stimmies. I mean, we'd have guys like Andrew Yang talking about, universal basic income, and of course, how do you pay for these things? Well, there's only one way to pay for them, and that's to print the money and create inflation. Mm-hmm. So yeah, I mean, that next wave up is coming, but again, I caution everybody. I mean, it's hard, it's frustrating. It's been a couple of years, and gold stocks been terrible 3 years. I'm hoping that's changing. I think it is, kind of feels like it is, but I don't know. I mean, I could be wrong. It could take another year or two. But I don't think the math is wrong. And I don't think, I do think a lot of people are hopeful that we're back into this deflationary trend, and hopeful that Trump and his Doge committee can balance the budget, and hopeful that therefore we'll have a strong dollar and everything will be good. But I don't think that's really what the math suggests. If you look at the math carefully, those are hopes. They're not kind of the hard, cold numbers. If and when the bond market fails, and I think that's coming, it's a big market. It's 36 trillion. And, eventually if the Fed goes to yield curve control, so all these bondholders are like, what do you mean you're locking me in at 3%? I'm not holding this shit for 3%, sold to you, right? So the Fed balance sheet, which is 7 trillion, I mean, add the 36. I'm not suggesting that would happen, but, I think the next round, I mean, we went from 900 to 4, and then we went back down a little bit, and then we went from 4 to 9, and now we've come back down a little bit. And I think the next one, we're going to go from 7 to 25. You know what I mean? And I think the price of gold isn't going to be in the same zip code. I mean, we're going to be at $4, $5, $6, $7,000 gold. And I think the prices of Bitcoin is not going to be in the same zip code. We're going to be at $200 to $500,000 Bitcoin. So it's there's a lot of upside in these alternative money assets, store of value money assets that can't be printed. So yeah, but as always, Tom, they will try to deny that there's a problem. They will say they're never going to print again. They will, they're right now nothing's broken, so they can, they've kind of got it papered over and everything's okay. But under the surface, you can see the problems starting to, emerge, and they will, I think, become more and more prominent. And then at some point, something really big will break, and we'll be right back in it again. And they'll do what they did in the past. They'll say, we have to do this, or else the system would collapse. And yeah, it's probably going to be inflationary, but that's better than the alternative, which is the Great Depression. That's always been the argument, and I think they'll use it again. Right now, the tether demand for Bitcoin is still a very small sliver of the total Bitcoin demand. But as this trend, that could change, right? I mean, as Bitcoin becomes higher priced and as more people use stable coins, well, then tether's going to become bigger. And they're going to be a bigger buyer of treasury bonds or treasury bills, and that's going to help the government finance its deficits. And so arguably, this whole Bitcoin eco-structure growth provides, one piece of a puzzle for helping the government to finance their deficits. And look, there's some people who've called for a strategic Bitcoin reserve and at much higher Bitcoin prices. I mean, the government owns 210,000 Bitcoin, although there was some evidence yesterday they were thinking about selling some. I sure hope they don't. But that at a much higher price, Bitcoin could kind of somebody used the word defease the U.S. government debt, and I think that's possibly true. I think the important thing here, Tom, is that the government, the countries, the world, the world needs to move to sounder currency, because the Keynesian currencies that we've got, with the levers and the Fed and the central banks that we've got, they kind of reach the end of the road, and we're all kind of losing faith in them. And they're trapped in that problem of like being a drunk and using alcohol to cure every hangover, and each hangover is worse, and so you got to use more alcohol and and the solution is just to go cold turkey, and you have a hell of a hangover, but you get sober again, stay there, which I would define as we're on a sound money system now, gold-backed currency or Bitcoin-backed currency. Then you don't have the credit growth and the boom bust problems that this Keynesian Federal Reserve system has created for us. That problem will go away, and that's I see that day coming. I have little doubt that that's how the world will evolve. Again, the timing is tough, right? I thought it was coming in 2008, and here we are 16 years later. So, you and I'll be having this conversation probably in 5 years. I think it's going to happen in 5 years, but I'll probably be wrong. It could take longer.
The broader takeaway from Lepard's analysis is the urgency of transitioning to sounder currencies. The Keynesian model, with its reliance on central banks to manage economic levers, has reached its limits. The diminishing faith in fiat currencies necessitates a paradigm shift toward monetary systems that cannot be easily manipulated. Whether backed by gold, Bitcoin, or a combination of both, such systems offer a path to sustainable economic growth and stability. Nonetheless, Lepard is pragmatic about the challenges ahead. Cutting government spending by significant margins, 30% reductions in defense, Social Security, and Medicare, for example, would be politically and socially contentious. Yet, without such measures, the fiscal trajectory remains unsustainable.
I think as a practical matter, the way we've got to get out of this is, and the way this is a debt crisis, it's a sovereign debt crisis. I mean, Ray Dalio has a great book on these, highly recommend everyone read it. And these have happened many times before, and it's not unusual, right? And there are a couple of ways. I mean, you just default on the debt, say we're not going to pay it at all, we're going to go bankrupt. That's a mess. That's really bad. That's not going to happen. But generally speaking, the way that you get out of these things is you have high inflation for a while. You run really, really high inflation. Maybe even you have an economic downturn, and then after that, then you clamp down on the money supply, and hopefully, you return to sound money and some kind of a reset. I mean, that's kind of the best case scenario as I see it. But yeah, pushing for a sound dollar is not going to help the fundamental problem. We actually need a weaker dollar. It's also interesting. I mean, they're talking about doing a strategic Bitcoin reserve, and everyone says that'd be good for the country and so on and so forth. And I don't disagree with that, but that's not good for the dollar. I mean, Bitcoin and gold are the two signals. They're the canaries in the coal mine that the dollar isn't working. And That's the other thing. I mean, somebody asked me the other day, well, hang on a second, Larry, how do we really know we're in this crisis, that we're at kind of the end game, and that the dollar has got problems, and the U.S. economy, that the whole, that we're truly in a sovereign debt crisis? I say, I know, I'll tell you exactly how you know. Go look at the charts of gold and Bitcoin. They're both at record highs. And then do a ratio chart of gold compared to the long bond. In the last 3 years, it's up 170%. Or Bitcoin compared to the long bond. In the last 3 years, it's up to 3,000%. And so these are forms of money that the government can't print. And what I believe is we are in a monetary failure event. I mean, maybe early days could, take 5 to 10 years to unwind, but we're well along the way to a sovereign debt crisis. And as I say, these have been seen before. We've studied these, Tom. We've seen Argentina go through this. We've seen Brazil go through this. We've seen Venezuela go through this. We've seen other countries do the same things. And we shouldn't expect that the outcome will be different for us just because we're the reserve currency. It may take longer, and we may be able to do a reset. I mean, we may be able to figure a better way out than they all did. But, if we continue, I mean, the only way we really get this under control is just massive cuts in government spending and entitlements. I mean, 30% cut in defense, 30% cut in all the Social Security and Medicare might get us going back in the right direction, but those things are pretty unlikely. So that's to me. I mean, that's one of the ways out. And by the way, if you did those things, you would have one hell of a recession. Do you know what I mean? That's the other thing. It's kind of amazing. Just I'll add as a side point here, we're running these deficits in a territory where the stock market's at record levels and unemployment is relatively under control, although ticking up slowly. So, imagine, and in the last two big crises, 2000 and 2008, when the stock market goes down 50%, as it did in both those crises, tax receipts fall, expenses go up, you get more unemployment insurance, and everything blows out.
The paradox of today's market environment adds another layer of complexity. Despite record-high stock market levels and relatively low unemployment, the U.S. runs massive deficits. Lepard warns that in a severe market downturn, tax receipts would plummet and government expenditures would rise, further exacerbating fiscal imbalances. Ultimately, Lepard concludes that the current system is approaching its breaking point. While the U.S. LOC may have more tools at its disposal than other nations, the fundamental problem remains unchanged. Transitioning to a sound money system is not just an economic necessity, it is a moral imperative to ensure long-term stability and prosperity.
Please like and subscribe my channel.